Hello everyone. Now we are going to explain the section C in accounting part, the preparation of financial statements. In this section, we will be explaining what are the accounting reports, the income statement, the retained earnings statement, and the balance sheet. Accounting reports are also called the financial statements of the corporations. Actually, they are prepared immediately after the preparation of the trial balance, and we have four types of financial statements for a corporation. We start by the income statement. It is the summary of all the revenues and expenses in a specific period of time. For example, we can prepare the income statement for a month, for a year, for a quarter, or whatever. Actually, the income statement shows the profit or the losses of a corporation. For retained earnings statement, remember that the retained earnings are the undistributed profit. They are retained in the corporation for future use. So the retained earnings statement show the change of the retained earnings in a specific period of time for 1 year, for 1 month, or whatever. The third financial statement is the balance sheet. It shows the assets, the liabilities, and the stockholders' equity on a specific date. The last financial statement is the statement of cash flows, which shows the cash receipts and the cash payments made in a specific point of time. However, in the following slides, we are going to explain the first three financial statements, but the last one, the statement of cash flows, is not required. Now let's explain in details each one of the financial statements. Before we start, I'd like to note that the order of preparation of financial statements is as stated in the previous slide. So we have always to start preparing the income statement, then the retained earnings statements, then the balance sheet, and finally the cash flow statement. The income statement reports all the revenues and all the expenses for a period of time. This period could be a month, could be a quarter, could be semi-annual, and could be a year. However, if in a specific period the sum of the revenues exceed the expenses, the difference between revenues and expenses is a profit, or it is called net income. And if in a specific time the sum of revenues is less than the sum of expenses, then the difference between revenues and expenses is net loss. Now let's have a look to the form of the income statement. We have to start by the title. The title is formed from three items. The first one is the company's name. For example, Adam Company or Adam Corporation, whatever. Then we write income statement, and on the third line we have to state the period for the income statement. For example, if we are preparing the income statement for the year 2019, then we write for the year ended December 31, 2019. And when preparing the income statement, we have to list all revenues and all expenses. You can see that the first title is the revenue in bold. Under this section, we list all the revenues of the corporation. In this case, we have only sales revenue. The second section of the income statement is the expenses. We can see the expenses in bold, and in this case we have advertising expense, amortization, bank fees and interest, computer repair, payroll, rent expense, and so on. When we list all revenues and all expenses, we have to make the following calculation. Total revenues minus total expenses. And as it is explained, if the sum of revenues is greater than the sum of expenses, then we have net income. And if the sum of revenues is less than the sum of expenses, then we have net loss. And we can put the amount of the loss between brackets to indicate that it is a negative amount. Retained earnings statement is prepared directly after the preparation of the income statement. And this is because the net income or the net loss that is calculated in the income statement is to be stated in this statement. This statement reports the changes in the retained earnings for a period of time. Actually, for one period, we have retained earnings beginning and retained earnings ending. The retained earnings beginning is the retained earnings balance in the first day of this period, and the retained earnings ending is the retained earning balance at the last day of this period. Let's give an example. If the period is 2019, the year 2019, so the beginning retained earnings will be in January 1, 2019, and the ending retained earnings is on December 31, 2019. The formula to compute the retained earnings is as follows. Actually, we have two cases. In the first case, we consider that the company has net income. So the retained earnings ending equal beginning retained earnings plus the net income minus the dividends paid to stockholders. And in the second formula, we consider that the company has net loss. So the retained earnings ending equal beginning retained earnings minus net loss minus dividends paid to stockholders. As a reminder, the dividends are the portion of net income that is distributed to the stockholders. Retained earnings statement is prepared directly after the preparation of the income statement. And this is because the net income or the net loss that is calculated in the income statement is to be stated in this statement. This statement reports the changes in the retained earnings for a period of time. The formula to compute the retained earnings is as follows. Actually, we have two cases. In the first case, we consider that the company has net income. So the retained earnings ending equal beginning retained earnings plus the net income minus the dividends paid to stockholders. And in the second formula, we consider that the company has net loss. So the retained earnings ending equal beginning retained earnings minus net loss minus dividends paid to stockholders. Now let's have a look to the form of the retained earnings. We start with the title. Actually, the title of the retained earnings statement is similar to the title of the income statement with one exception, that we write retained earnings instead of income statement. So in the title, we start by the name of the company, then we write retained earnings, and finally we write the period of the retained earnings. Now, after preparing the title of the retained earnings statement, we have to start our calculations to find the ending retained earnings. As is the formula, we start with the retained earnings beginning. We add the net income or minus net loss, and we minus the dividends to find the retained earnings at the end of the period. The third financial statement is the balance sheet. The balance sheet reports all the assets, liabilities, and stockholders' equity of the company at a specific date. It is also called the statement of financial position, since it shows what the company owns and what the company owes. So it shows all the resources of the company as well as its obligations. Finally, the balance sheet proves the basic equation of accounting. Assets equal liabilities plus stockholders' equity, since all assets, liabilities, and stockholders' equity are listed in the balance sheet. Let's have a look to the form of the balance sheet. We start by the title, which is a little bit different here. We start by the company name, then balance sheet, then a specific date. On the specific date, we write only the date, for example, on December 31. However, let's start with the first section of the balance sheet, which is the assets. Actually, the balance sheet is divided in two sections. The first section is assets, and the second section is liabilities and the stockholders' equity. In the assets section, we list all the assets accounts. For example, current assets, long-term investment, property, plant and equipment, and intangible assets. All accounts under these categories should be listed in the assets section. And finally, we have to find the total assets. The second section of the balance sheet is the liabilities and stockholders' equity. From its name, we realize that this section is also divided into two subsections. However, we start with the liabilities. Under liabilities, we have to list all the current and all the long-term liabilities account. Then we have the stockholders' equity. Under the stockholder equity, we have to list the capital stock and the retained earnings ending. The retained earnings ending is calculated in the previous financial statement, which is the retained earnings statement. However, capital stock plus retained earnings gives the total stockholders equity. Then we have to find the total of liabilities and the stockholders' equity. This total should be equal to the total asset. Now let's solve exercise 1, page 26 on your book. In this exercise, we have a trial balance for the PS company on July 31, 2014. This trial balance shows the assets, the liabilities, the capital stocks, dividends, the revenues, which are fees earned, and the expenses of PS company. And it is required to prepare the income statement, the retained earnings statement, and a balance sheet for PS company. Now let's start with the income statement. We have to prepare the title first. The first line, we write the name of the company, which is PS Music, then income statement, and then the period. We are preparing the income statement for the month ended July 31, 2014. The income statement includes all the revenues and all the expenses of the company. In this exercise, we have one revenue only. It is the fees earned, which is $21,200. That's why under the revenues title, we record the fees earned only. Actually, the amount of the fees earned should be written in the other side of the table. The second part of the income statement is the expenses. Under the expenses, we have to list all the expenses of the company. In this exercise, we have music expense, we have wages, office, advertising, equipment, rent, utilities, supplies, insurance, depreciation, and miscellaneous expenses. So we have to write all of these expenses, then we have to total these expenses. That's why we have realized that the total expenses at the end is 16,245. Now, and after listing all the revenues and all the expenses of the company, we have to find if the company has net income or net loss during this period. However, in this exercise, the revenues 21,200 exceeds the expenses, which are 16,245, and that's why we have net income in this case. The net income is the difference between the revenues and expenses, so 21,200 minus 16,245, and we have net income of 4,955. Now let's prepare the retained earnings statement. We start with the title of the statement, the name of the company, PS Music, retained earnings statement, and then for the month ended July 31, 2014. In this exercise, we have net income. So we have to follow the formula regarding retained earnings ending stated that retained earnings ending means at the end of the month of July, equal retained earnings beginning means retained earning on July 1st, plus net income minus dividends paid. In this exercise, the retained earnings beginning on July 1st is 0 since it is not given in the exercise. So we have to add the net income calculated in the previous financial statement in the income statement. The net income was 4,955. So 0 plus 4,955, the total is 4,955. Then the dividends should be deducted from the totals. So minus 1,750, you can realize that the dividends are between the brackets to indicate that they are negative. And we have the retained earnings ending on July 31 at the end of the month July, which is 3,205. Now let's prepare the balance sheet of PS Music Company. Regarding the title, we have first the name of the company, PS Music, balance sheet, and then the fixed date. We are preparing the balance sheet on July 31, 2014. As you know, the balance sheet is divided into sections. The first section is the assets, and the second section is the liabilities and stockholders' equity. We start with the first section of the balance sheet, which is assets. The first category of assets that should be listed is the current assets. In this exercise, we have in current assets category, we have the cash account, we have the accounts receivable, the supplies, the prepaid insurance. So we list these accounts with their amounts and we find the total current assets. Then after the current assets in this exercise, we have fixed assets. We have the equipment as a fixed asset. So we list equipment and we list the amount of the equipment in the other side. And now to find the total assets amount, we have to add the amount of total current assets to the amount of equipment. So 16,845 plus 7,450, and we have the total assets equal 24,295. Now let's prepare the second section of the balance sheet, the liabilities and stockholders' equities. We start with the liabilities. We can realize that in this exercise we have three accounts of liabilities: the accounts payable, the wages payable, and the unearned revenues. These three accounts to be listed under the current liabilities section, and the sum of these three accounts is the total liabilities. Under the stockholders' equity, we have two accounts. We have the capital stock, which is given in the exercise by $9,000, and we have the retained earnings. The retained earnings amount is previously calculated in the previous financial statement, which is the retained earnings statement, and it is 3,205. To find the total of liabilities and stockholders' equity, we have to find the sum of total liabilities plus the total stockholders' equity, so 12,090 plus 12,205, and the total liabilities and stockholders' equity is 24,295. We realize that the total liabilities and stockholders' equity is equal to the total assets. Now let's solve exercise 2, page 29. In exercise 2, we have list of accounts. We have accounts payable, accounts receivable, retained earnings, capital stock, equipment, prepaid insurance, prepaid rent, land, salaries payable, supplies, and unearned fees. And we have the cash account, but with missed amount. So for all of the accounts, we have the amounts, but only for cash, we do not have the amount of the cash account. However, it is required to prepare the balance sheet of the company and to find the balance for the cash account. So let's prepare the balance sheet and let's start with the title. In the first line, we write the name of the company, Labrador Company, then balance sheet, and then the date, which is on June 30, 2014. The first section of the balance sheet is the assets. We start with current assets. In this exercise, we have cash, accounts receivable, supplies, prepaid insurance, prepaid rent, and we have to find the total of current assets. However, we have the balance of each account except for cash. That's why for cash account, instead I put the amount, I will put an X instead of the amount. And then the total current assets will be 120,800 plus X. Then we have the land and equipment under the fixed assets, and the total of land and equipment is the total of fixed assets, which is 486,700. And now we have to find the total assets. The total assets in this exercise is equal to the total current assets plus the total fixed assets. So 120,800 plus X plus 486,700, then the total assets equal 607,500 plus X. The second part of the balance sheet is liabilities and stockholders' equity. We start with liabilities. We have three accounts of liabilities in this exercise: accounts payable, salaries payable, and unearned fees. These three accounts are to be listed under the current liabilities section, and the total of liabilities is 36,000. The capital stock and the retained earnings should be listed under the stockholders' equity, and the balance of the capital stock and the retained earnings are given in the exercise. So we have to list the capital stock 100,000 and the retained earnings 509,000, and the total stockholders' equity equal 100 plus 509,000, so equal 609,000. The total liabilities and the stockholders' equity equal total liabilities plus total stockholders' equity. So 36,000 plus 609,000 equals 645,000, which is the total liabilities and stockholders' equity. We know that the total assets equal total liabilities plus stockholders' equity. However, the total assets equal 607,500 plus X, and the total liabilities and the stockholders' equity equal 645. So we put the following: 607,500 plus X equal 645,000, and we make the calculations to find the X equal 37,500, which is the amount of the cash account. The exercise 3, page 30, is similar to the exercise 1. Please do solve it by yourself, and please, if you have any question regarding this section, please refer to your instructor.